Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer at Worth Asset Management. Today is December 27, 2022. And I'm going to go over your three threes for the week. I'm going to go over our major asset classes and their performance on a week and year-to-date basis, and our top three on a long-term basis. I'm also going to go over how we are positioned on both equities and bonds on a short-term basis, and has there been any changes, and our top three market movers for the week. So let's jump on in.
Okay, let's go over the major asset classes performance on a week and a year-to-date basis. U.S. equities finished higher on Friday following the PCE index report that showed that consumer inflation was continuing to ease last month, and that in the hopes that the trend would continue in the months ahead. This week, however, will be a holiday shortened one with low volume, but could still be eventful as some investors are hoping for a Santa Claus rally to close out the last week of the year on a high note. For the week, the Dow gained 0.9. The S&P was basically flat, down 0.2, and the NASDAQ was down 1.9. There were some winners, however. International markets were up 0.7. We had gold up 0.2, Bitcoin up 0.7, and commodities was the big winner, up 2.5. On a year-to-date basis, however, we still only have the US dollar and commodities being the big winners for the year. We had bonds down right now at down 10 to 12, and equities down anywhere from 14 to 19, 20, 25, and 33 for the NASDAQ. All right, but let's go over the top three asset classes on a long-term basis for December 27, 2022. And again, we have no change this week. We still have the T-bills, dividend equities, and utilities as our top three asset classes, our major asset classes. And so defense is still on the field and the primary driver heading into the end of the year. On a 1 year look back, we actually had the NASDAQ, S&P 500, and long Treasury bonds as our top three major asset classes. But let's look at the bonds on a short-term basis. And if you look, we had the year-to-date performance. We're down almost 12% on bonds, and that makes it one of the worst years almost ever for the aggregate bond index. We did have a rise in interest rates. They got down as low as 3.4. Now they're heading back to the high side. They're at 3.75, and we started to nibble right here in the middle of November, and so far so good. Even though they've rolled over a little bit, we're still positive about 2.5 since we started that nibble. So far so good on the bond side. Let's take a look at the equities on a short-term basis. Right now, the year-to-date performance is down 19.3 for the S&P 500 index, and that's one of the major indexes that a lot of investors look at. And a reminder, we've been in protect mode 3 times this year, and we've tried to start to nibble 3 times also. And right now, we're sitting in that last one where we've tried to get in. And if you look here at some of the support and resistance zones, we were doing really well. We started to bounce and trade inside that resistance and support zone, and we broke below it. And this last week was basically flat. We're still positive from the bottom here, but we've got to see if we're going to have a true Santa Claus rally. We've got to see this get past this resistance zone in the 39 to 39.50 range and start heading back up to the 41 to 42 and break that. That would be a tremendous Santa Claus rally. And that could even happen into the first couple weeks in January. So we shall see. All right, let's go over the top 3 market movers for the week. On Tuesday, we have the Case-Shiller National Home Price Index for October. Okay, and the projection right now is that they've fallen 1.2 in October, and that follows a 1.5 decline in September, so a little bit better than last month, but it's also the 4th consecutive month of price declines for that index, so that's not a positive. On Wednesday, we have pending home sales as the number 2 market mover, and sales are projected to have fallen 0.5 for November, but over 30% from a year-over-year basis. That's a big drop. And that's so basically pending home sales have fallen 11 out of the past 12 months. And a lot of that has to do with the rising mortgage rates, the decline in affordability, the prices got too high. Now with interest rates going up, and now everyone pulling back the inventory because they're just like they don't want to sell it right now. So all those things put together has put a damper on the housing market. On Friday, we have the Chicago Purchasing Managers Index, also called the PMI, and that tracks the manufacturing activity throughout the Midwest. That estimate for December is at 39. Okay, and last month it was at 37.2, which was the lowest since June of 2020. So when it's under 50, it's a good contraction. So we've got to see that purchasing managers index up, heading to north to 50. So we shall see if that happens here moving forward into the new year. That's it for this week. Thank you for joining us. Our next update is Tuesday, January 3rd. Monday will be January 2nd, and that's they observe the New Year's on that particular day. So the markets will be closed. So happy early New Year, and good luck trading, and continue to subscribe and like, and we shall see you next week. Happy New Year.